All right, week 50, outlook 2 of 2, beginning with Euro USD. Not much has happened other than a very large move. So we got a very large candle to close, I guess, today's trading. We're in the new trading day now, so we're looking at this. But this is showing in continuation of the bullish run and the price leg and the analysis that we called out earlier, reiterating once again that the market state currently is a bullish run. We generated this current price leg. We had a pullback to mitigate the inefficiency or price gap, to be specific, inside of the price leg. So now the impulse is balanced with the pullback completely, and then we got our secondary opportunity off of here. If you didn't get in down in here, and then we broke this immediate liquidity point that was generated post secondary option for entry. And now we're starting to pick up momentum to push higher, with the immediate next target would be this internal liquidity point here. And ultimately, we are looking for continuation higher to take out the liquidity point, the external liquidity point. And so every single one of these highs inside of the pullback as we begin the next impulse phase or the secondary impulse are internal liquidity points of this price leg. The external liquidity point is the ultimate target for the swing trade. So as of right now, we are, we've cleared our first and actually second internal liquidity points, and now we're looking for the third, fourth, fifth, and then ultimately external. But as of right now, yeah, we're just continuing higher. Not much to say on that for EU, other than what was said. All right, and then on GU, we're starting to pick up more momentum. We have, once again, reiterating that bullish run, bullish range, and now we shifted to a bearish run. We're looking for a pullback. Uh, we're looking for the pullback to be solidified, and really the pullback to be named a pullback finally. Once we clear this internal liquidity or this liquidity point here, that's a part of the impulse phase of this potential price leg. I can't really call it a price leg yet until the uh, the impulse is mitigated, or I'm sorry, not the impulse. This liquidity point solidifies our pullback, and then I'll be able to say this is the price leg. And once that happens, then I've explained what I'm looking for as far as price gap or inefficiency, specifically the price gap, and here for sells to continue this bearish run. All right, so that's it for GU. On the NASDAQ, we are still inside of this price leg, really. Or yeah, we're still inside of this potential, or we're still inside of this price leg. So we've created our structural point. We're in the impulse phase, so we're looking to create the liquidity point. So we're not in the price leg. We're generating a new price leg potentially. Um, so during this impulse phase, we're clearing, previous highs. We've just mitigated this high over the past, where we've tapped or really played around, really sensitive to this high here, a part of this little bearish um, run here. But this isn't the market state bearish run. This is just an internal bearish run. It's really a pullback, but um, ultimately we've tapped into this multiple times, and we're not really giving any headway, so we're just still consolidating. There was some news that gave, this little candle or this candle, which was yesterday's or today's really price action, but nothing that was substantial to take us out towards the new high or to take us to new low. So it seems that we're kind of entering into, just a little bit of a consolidatory internal consolidation range. So we're going to see what happens moving forward. But like I said, if you watch the previous outlook, week 51 of 2, this is kind of what happens when the market is uncertain of where things are about to go. There's lots of tech news, lots of socio-political, global political news. There's lots of stuff going on. The Fed actually spoke today, which sparked a lot of this volatility. But none of that really matters to me other than validation of the technical analysis that I'm looking for. And so currently, we're still in a bullish run. So I'm going to focus on looking for buys. And if I am looking for sells, it'll be short term, short term, and short sells. So I guess if you are looking for a selling opportunity, price had already mitigated it once, but it looks like it mitigated a little bit higher. But 50% of this price gap here, it's not really relevant. I don't see it as relevant because of this interruption in price action here, this green candle. If this green candle wasn't here, I would definitely be seeing this as a valid price gap. But because we're showing a lot of sensitivity in here, even if we did get some sort of pullback, I wouldn't see this as a pullback to continue price action lower. I would just see it as a potential pullback to refuel and then go higher if price does not already just avoid all of this sensitivity and just go higher. All right, so that's it for the NASDAQ. And then on gold, all right, so I had this marked up a little bit, or I had a trade that I was in a little bit lower. I decided to close it because I didn't really like the price action here. And ultimately, yeah, like I said, it was a counter trend trade anyway. So I'm actually kind of glad I closed it. Well, ultimately, price, we have the liquidity draw here, but it's failed to continue lower. And what's actually happening here is that we're really respecting this price gap here. There just seems to be a lot of liquidity inside of this price gap that price wanted to mitigate. And so this really is like an internal or like a micro and a micro range, but it's really just consolidation. And so because there's a lot of consolidation, lots of taps inside of this price gap, that means there's a very large liquidity pool. And now we're starting to see, especially if this high here is taken, then the bulls would have won and will continue on with our regularly scheduled program, ultimately looking for mitigation of the liquidity point, which happens to coincide with the all-time high on gold. All right. So yeah, that's pretty much it for the outlook. Just continuation of the current price action. That just seems to be the theme here in Q4. Lots of intraday opportunities. It seems that a lot of the early opportunities setting up the swing trades happened, earlier in the quarter in the Q4 months. So we're looking, or I'm sorry, this is Q4 of the year, but Q1 of the fiscal year. So when I say Q4, I'm talking about calendar year here. So Q4 earlier months, it seems that the the plays are already set. So now if you're looking for entry opportunities, you'll be, I'd say, be very cautious and very, very specific and very, very methodical in your entry models moving forward, because as we displace farther from the ideal entry point, that's when a lot more volatility kicks in. One reason we're moving into the premium. So there's obviously going to be shorter interest. As we move higher, short interest grows. And if we were on the opposite side, as we go lower, buy interest grows or long interest grows. So just be cautious of that, but expecting sticking to the bias if this is a bullish run. It really it would just be a matter of stop loss placement if you play stop loss, um, and then we just go from there and look for continuation of the current bias. So yeah, so that's what I'm seeing on gold. I'm actually going to get rid of this line, get rid of this here. Probably I'm gonna leave that until the next outlook just to see once we take this high. So if we take this high here on Friday or going into Monday, I'm gonna get rid of this liquidity draw line because that'll just be negated. It was a liquidity draw, but it failed to give the full action to show that we were transitioning price action to go lower. Like this one, where we have liquidity draw here, and then we have expansion, and we're still expanding, and then we had an internal liquidity draw here, but this failed to, go lower. As of right now, we're expecting price to go higher. All right, peace.